do you go about finding shares that are about to rise?
Okay, well, the first thing is valuation, and I like to trade only in shares that are trading below our valuation by at least 20%. And on VectorVest, we have an algorithm that calculates the valuation of every share on the London stock market every evening. We buy the fundamental data from Thomson Reuters. That's downloaded every evening. So the data that we're looking at on VectorVest is exactly the same data as the City analysts will be pouring over tomorrow morning. The computer sucks all of this in and spits out a valuation for every share. It also spits out a earnings potential in relation to a AAA rated corporate bond over a window of 3 years into the future. So if a share's got a relative value of 1.3, for example, that means that we believe it's going to outperform a corporate bond by 30% over a window of 3 years into the future. Those two things drive the share price. However, it's only over a window of 3 years into the future. That's the only timing that's in there. We then look at relative safety, and if you were a worry-free type investor, then you would want relative safety to be really high. If you are a more momentum-based investor, stroke trader, and you're prepared to manage risk proactively and you want to watch every single day, then relative safety not that important. For example, my son in Johannesburg looks for shares that are undervalued, shares that are got a high earnings potential. He doesn't look at relative safety at all because he's sitting there all day in front of 6 screens and he's managing risk proactively. And we want to find those shares, so I can actually search for those shares easily and I find those shares without a great deal of effort.
Some traders find the hardest thing to do is to let go of shares that they're like a little bit in love with. What would be your advice?
I understand that. For example, over the last few days, we've had a really good run at VectorVest on building stocks since 2009. I mean, really good, many hundreds of percent up. Building stocks went into a lull a few months before the Brexit vote and now are starting to break up the page again. I wanted to buy into a building stock and I was looking at the old usual suspects, Barratt, Bellway, etc. But I plumped for a company called Galliford Try that broke up, FTSE 250 company broke through a resistance and has moved up very nicely in the last 3 weeks. And I think I was influenced by the fact that I made really good money on Galliford Try 3 or 4 years ago, and I think that influenced the decision because I was hemming a hand between Bellway, Barratt, Redrow, which is another, they've all moved up nicely, but I was probably influenced by that. How do you stop that? Well, we're all human, that's for sure. We're all human, and I just try and, the only way emotion is our body's reaction to a thought, and the only way to actually stop those emotions is to stop the thoughts, so a little bit of presence, a little bit of meditation would work wonders there. I know it's not something that the average gung-ho trader wants to hear about. I have a friend who's a trading psychologist, and when he goes into the city and he talks about these sort of concepts in the city, he reframes it from sort of being present and new age stuff. He reframes it into special forces. And he shows how the SAS and special forces around the world work with this sort of stuff so that they can stay in the moment when somebody's shooting at them. Okay, largely it's exactly the same stuff. There's a gentleman by the name of Steve Ward. He's written 2 really good books on trading psychology in the UK. Absolute gentleman. And he's reframed it, he told me, on special forces, and that's received exceptionally well by the gung-ho nature in the city itself.